Hi.
Hi, Bill. How are you?
Hi there. Fine. And you?
Good. Thank you for joining us today. I know we have a long one tomorrow. So quiet here, Bill. It's hard to comment on anything, isn't it? The S&Ps, they retraced much deeper than the dollar did. What are you seeing and thinking here?
I guess market is in wait and see mode. I do believe that we are going to have, well, the ECB tomorrow. We have
Right.
polls on Friday. So guess those are big uncertainty events, right? We don't know what will happen with the ECB tomorrow. Most people speculate the ECB will be even more dovish than usual. We are going to see downgrading forecast and probably some talking about further stimulus if needed, meaning the ECB does not want a stronger euro and inflation is still subdued in Europe. So I guess that is a bit scary for euro buyers. And
Right.
additionally, despite today poor ADP reading and despite all the Chinese turmoil, I do believe that the market still believes that the Fed will raise rates this September, and the answer to whether if it's possible or not is the payroll, right? Not
Yes.
that I believe so, but maybe the market is really convinced about that. So until we don't have the payroll out and see if it's positive or negative, the market will start to shrink these days and wait for that, I guess.
Okay. Yeah. I almost think, and I'm getting a pretty strong echo here. I'm not sure why, but I'm almost thinking that the market and risk would actually like an interest rate increase because the fall in the market happened after there was uncertainty that it was going to happen again, and then we had all this market fallout. I think it might be constructive for the Fed to show that they have faith in the economy to raise rates, and if they don't, I think that sends a signal that the unraveling of this equity bubble might continue. I'm curious, Val, we put in a line in the Dow, I don't know, about 5, 6 months ago, where it's coming in, because I think eventually, even if we recover back to 17,000, that we still may visit that line in the Dow. You still have that line?
I still have it. Here it is in the
I'm
week.
curious, I'm curious where it's coming in now.
For this week, around 14.
Okay. All right. So looking for maybe a retest, a rally into the Fed meeting, maybe.
Yeah,
I don't think we're going to crash and take out last week's lows
no,
before.
not
Do you?
no, not before September 17, which is the day of the meeting and the day that we will see some light over the matter if the Fed is raising rates or not, right?
Right. How about the commodity currencies? I was surprised. I thought Canada might come off more. Last time we were on, I talked about that we could have a vicious bear market rally in crude, maybe back to 46, and that manifested, but Canada gave up very little ground.
Yeah, we talk about this and the probability of an interim bottom in here, and we tested 50, but quickly retraced from it. And as you said, nevertheless, this strong recovery in oil, the Canadian dollar wasn't able to follow much, right? It remains under pressure. Uh, I do believe that there's plenty of room for falls in commodities, particularly because of China's economic slowdown. You know, China imports is the second largest economy and imports all kind of commodities. And if the economy starts to go back or slow down, then the imports will be reduced and therefore will be less demand. And therefore, that's why commodities are under pressure. Metals also, despite whatever we have seen in gold these days, I believe that still there's like Damocles sword pending above them, and there's a risk of another leg lower in commodities, and that's why the Aussie and CAD and New Zealand dollar are so weak these days.
Yeah, I thought it was interesting that finally the Saudis leaked that they may be willing to do something like the cut in supply, and you had a one-day rally that gave back everything and more so yesterday. after the Saudis talked, it kind of makes me think that this cartel is broken, and the influence that they have over the market is waning because of U.S. production. And was their game plan to um, break U.S. producers, and when in fact it's breaking them because they're going to the debt markets to raise cash, and now maybe OPEC cuts don't mean as much as they did
Yeah,
in prior years. What do you think?
yeah, I do agree with that. Indeed, at this point, it won't matter much than in previous year. Anyway, if, the U.S. keeps giving signs of economic growth, I do believe that we will be ignoring a bit more China at some point, and that may favor commodities, as you have said. But I'm not clear at this point, and I do believe that the answer is the payroll once again. A funny thing is that uh, over 70% of the times of the last 15 years in August, payrolls tend to disappoint big, right?
Oh,
So,
interesting.
yeah, over 72, 73% of the times in the last 15 years.
So anything under 220 would be a disappointment Friday.
Yeah, there's a good chance we had something below 200, and that will be a big sell off for the greenback.
Yeah, because then for sure people are going to say they're not going to move in September.
Yeah,
And then they have cover saying it's not because of China and market turbulence, it's because of employment growth. And I'm sure they're going to be paying attention to the wage number too. Isn't that almost going to be as important as the number?
lately we have been paying a lot more attention to wage.
Okay. All right. Well, we're going to be covering the ECB, the fearsome foursome tomorrow, Val.
Yeah.
You and Yohei and Maury and me. So look forward to it. What are you looking for? Is there a press conference tomorrow after the announcement? And
We have a
looking
press.
for anything major, or is it going to be a yawn? What do you think?
We have a press conference on the
Uh,
forecast of growth and inflation, and my take is that we are going to have a more dovish Draghi this time. Meaning, how can he be hawkish, right? But I'm expecting them to downgrade a bit, probably inflation forecasts. Maybe they don't touch growth forecasts, which be a bit mixed, but generally speaking, I'm waiting for a dovish stance from the central bank. I
okay.
don't.
And is your view that that'll pressure the euro?
I I know he wants. I know that Draghi wants. I'm not sure if he will be able to do it just with words.
Okay. What do you think? If it happens, and still, I was looking for this pop we had in the euro. I still think there's a possibility it's not done because its pullback from 1320 so far looks kind of tepid to me. Do you have any important areas that if we penetrate,
Yeah,
this rally could continue and maybe even take out that 117 high? Do you think that 117 high is going to stand for a long time?
yeah. I'm looking for this level, the 1440 price, and we have several daily lows, highs, sorry, in there, and
Yeah,
it's still the 38.2% retracement of the last 2 weeks run, right?
yeah.
Those 2 weeks rally. So I'm considering the fact that if we take it again, then there's a good chance that we have a leg higher above this one, probably towards 120 or so. I can't see it, honestly. I don't believe the euro has the strength enough, or Europe has the macroeconomic background enough to favor a rally of up to 120, right? But that's my belief, not
Yeah.
what the market believes.
Yeah, if it happens, it may not be about euro strength. It may be about the Fed's not going to tighten, and people worried about the U.S. Sliding into recession without QE happening here, while QE is happening in Europe. That's a thought.
Yeah, it could be. It could happen more on dollar weakness than on
Yeah,
euro strength.
right. Okay, Val, thanks for jumping in here today, and I'll see you early tomorrow morning. Look
Yeah.
forward to covering two live events with you this week, the ECB and then the big day on Friday.
I hope they're fine enough.
And then all the adults come back from vacation the week.
Yeah, I was about to say that. Yeah, we are going
Yeah.
to have the
I
last
think we could
month.
use. I think we could use larger average trading ranges in all the pairs, don't you?
Yeah, these days.
Okay. So we could say goodbye to Rip Van Winkle markets and start to get some ranges. Okay.
Yeah, yeah, sure.
You know who Rip Van Winkle is?
Yeah, I have to read it when I was.
Okay. I wasn't sure you knew the fairy tale, but you know, he
I
went
have
to.
read it. It.
How
We.
long? How he was not an insomniac. How long did he sleep?
I don't remember that
20
much.
years. He took a 20-year nap.
Yes.
How about
Okay.
that?
Yeah.
So if we fell asleep today, Val, and we woke up in 2135, where would the euro be?
Oh, okay. I have no clue where it's going to be next week, and you asked me about 20 years later.
I'd bet that if we woke up, there would be no euro. There
Yeah,
would
I was
be
about
no
to
there,
say that.
huh?
I
That
was about to say that.
there will be no U.S. dollar.
Yeah, I do believe that it is going to be a US.
That everything will be cashless, and then the governments can see every time we do anything.
Like,
So
brother.
let's not go to sleep and carpe diem, seize the day. That anyway, that's my Rip Van Winkle call on the euro and U.S. dollar. In 20
Okay.
years,
I was
there will be no more paper, only digits.
okay.
All right.
The dollar
All
will
right.
survive.
And in fact, I'm leaving a place on my forehead to get that RFID chip put in, so I could buy, sell, and trade after I wake up from my nap.
Okay.
Thanks, Val.
Thank you, Dave.
See you tomorrow.
Bye bye. Thank you all. See
Okay.
you.
See you.